Good afternoon, everybody. Welcome to Dips and Rips. I am here with the legend himself, Charlie Moon. What's going on, Mr. Charlie?
What's up, legend Howard Greenberg? How are you doing, brother?
Man, I think we're both fired up today again about our markets and market participants and manipulation and controversy and screwing the little man. Any way you look at it, I think we're both in the same boat. I think we're both pretty fired up, as we were just talking. I know you are. So why don't we start with you and equities? What's going on with BBBY? And those that don't know, that is is Bed Bath Beyond, which I always remind people doesn't sell beds, baths. They do sell the Beyond, I guess.
Yeah, so I've stated publicly, by the way, that I thought Ryan Cohen was, I don't know, I don't want to say stand-up dude, but I really liked what he had done because I'm a big fan of Chewy, right? That's really his claim to fame.
Yeah.
I'm a loyal client, and I love what he did with GME. And then surely the BBBY thing, last podcast, we had talked about it a bit, but, I've been on TV. I love the opportunity. I love that he was a part of the company. And I definitely felt that there was a up rip in play. It certainly bubbled up. We haven't filmed in a couple of weeks. I just got back from Vegas and there's just, a lot of things that kind of got in the way. So sorry about that, everybody. But it turns out now there's this controversy around this BBBY thing because Ryan Cohen is a greater than 10% shareholder. And for those that don't know, when you own more than 10% of a company stock, you have to file any moves that you make. It's a SEC rule. There's, multiple ways of filing. Usually it's like 13 Ds or whatever.
So I've heard about those, Charlie. I got a quick question on you for that. Doesn't matter if you work for the company or, you don't have to be like the, CEO. It's just anybody who buys. So if I tomorrow bought 10% of Apple, I got to notify that, right?
You actually have to file with the SEC. Okay. You like any moves that you make going forward has to be registered and filed. But if you came in at 9.9%, I mean, you could dump on the markets, you could buy at the markets, as long as you don't cross that 10% threshold.
And if I remember correctly, Warren Buffett is big on playing that. Well, if I remember correctly, I've seen that Warren Buffett's big on playing that. He'll accumulate a lot right up to that 9.5% and then let you know and immediately buy the other part that he wants.
Yeah, it's kind of like working in stealth in a sense. But this whole thing is that he became a major shareholder. And he's been talking up. And in fact, on the 16th, he was actually after hours trying to pump up the stock. So he filed a Form 144 yesterday, which basically says that is his intent to sell his shares. And he has to disclose how much he wants to sell. He disclosed his entire position. Whoa. So what just came out right now from a pseudo-reputable source, it depends on what side you kind of play the line. They've been known to flaunt total BS, but Zero Hedge right now is showing a Schedule A filing, and it shows that RC Ventures, which is the LLC that Ryan Cohen used, and he's known as RC, he actually started selling on the 16th. The Form 144 filing came out yesterday, which was the 17th. Today's the 18th. And if this is correct, he unloaded pretty much half of his underlying holding or close to it on the 16th. And then basically around either early on the pump or midday, and there was 3 distinct heavy drops that I saw yesterday. He was dumping all day yesterday. And it actually looks like he closed everything out yesterday. And then they filed today that he's completely out of his position. That came in after hours. So currently right now, BBBY closed at 1855. After hours trading here, what is this? Less than a half hour after, a little over half hour after trading. We're printing at 12.19s. This son of a 5%. Hold on. This son of a and I'm not, and again, I told you I was a supporter, but this son of a really set people up here because he went on and pumped up BBBY. That's why I pumped hard after hours. That's why I pumped during the day, talking about the upside, how he's a player. And then he used the market. He used his followers his participants to dump to make millions of dollars. And, we frown upon that in our business. It gives myself and yourself a bad name.
Absolutely.
This guy is using his following, using the dynamic, using people really, really like the. I mean, I was one of them. I really like this guy. I thought he was young, successful. Why wouldn't you want him running your business or being a part of your business? I mean, he closed out what it looks like a 15,000 lot or close to it of options, and his entire 9.1 some million shares, all within the 2 days before today. And it was already, BBBY was already shaky. People were already concerned. Everybody started dumping at the open. We traded at 21 down to 18s. It tried to hold 18s. The tape looked really good today. It looked like there was some retail demand. And sure enough, news came out. Everybody's headed to the hills. It's a fire sale right now. And there's people, unfortunately, that A, don't know how to trade after hours, or B, are buying into this name thinking that, well, it's intent to sell. He hasn't sold yet. And all the meanwhile, he's already out. On top of your head, guys.
I saw on Twitter people like backing him all day, saying stuff like, "Oh, don't spread FUD." He just filed intent. You don't know if he's going to sell. He had already sold.
Yeah, well, me and that idiot got into it a little bit online, right?
Well, I saw it other places, not just with you guys.
Oh, yeah, but I'm just saying, me and that idiot got into it online. Yeah. And then, what did I say? I told him, I'm like,
you don't file unless you're selling. You nailed it. It's the old where there's smoke, there's fire.
Right. And like I said, buy the dip, and like he's clearly blaming me being a part of the problem instead of warning people, which is my intent. And I told him I only have 1,000 followers. I'm like, you literally repeated what I just said. Buy with your profits. Way to make my point. And I said as well, no offense, if you plan on actually buying this dip, you're rooting for the price to go lower, not higher. You're looking for it to go lower. So I told him stop it. It was Dan with whatever 15 numbers.
And I saw that other places. I mean, it goes with, as I do think that as I've been really actually trying to get into the sort of the meme game because I'm probably the worst meme trader that ever lived. I'm the king of FOMO. I should get a shirt that says king of FOMO.
No, you're just like every one of them, bro.
And so but the problem is that these loyal followings, they don't go in with open eyes. They
exactly
follow these guys, and they're not realizing that they're the liquid they're the exit. They're the liquidity that these big hedge guys need to get out. The same way that we saw, I've been pissed off about Sam Bankman-Fried. I really do feel that his connection, especially as we're seeing stuff unfold, that very similar type stuff in crypto. But
we'll talk about that in a second for sure.
Yeah.
But this is the problem. The problem that I have right now is that I clearly understand the Reddit crowd. And, I'm not saying that they're not educated. They're actually a very educated crowd. But the problem is they're not educated in the dynamics of trading. They're educated in understanding how maybe the markets may operate in some sense to a really in-depth scale. But when we actually compound it and put it together, it really comes into play that they just don't understand trading. And that's really what I was pointing out. And this is why I'm pissed, is because you have a guy that people fully trust, right? They fully trust because he's a supporter. He's one of them, blah, blah, blah. And this son of a gun just used you in like the worst way. And what's really going to be painful is that the fact is now we have a substantial amount of bag holders. There's going to be people that are going to be crying. They're soured on trading. And then there's other people that are going to be so financially affected. And yes, they may have overextended, but again, people just don't know. You can't blame people because they don't know. And now these people are in severe, dire financial straits. And yeah, lawsuits are going to come. Nothing's going to come from it. Nothing ever comes from it. And more importantly, I don't know if BBBY has a chance of popping again. They need some sort of serious catalyst. I actually think that if it remains at like $12, $13, man, BBBY has burned through so much of the cash reserve, 90%, Howard. We're not even halfway through the year. They had over $1 billion cash. They're left with like 110 million or something like that. They're going to have to make an offering. And guess what it's going to do? It's going to kill the stock. It's going to change the structure of the stock, meaning the float gets bigger. Let me just make sure of this. Hold on.
Can they even increase it? I mean, because I know
Yeah,
like AM.
so right now their float is registered somewhere around 68, 69 million. That's what it's thought.
Yeah.
Some people are like Morningstar says it's somewhere around 28. Let's just say it's 60, right? They have shares outstanding at around 80 million. That means they could dump 10 million shares on the market to get cash.
Okay. Yep.
And all that is just adding jet fuel on fire and making that an explosive event. And now all of a sudden people are holding at 26. I mean, it printed 30s, right? So let's just say from 20 to 30, and this thing melts down to $5, maybe even $4 now because people are so soured on it. What chance do these people have to at least just even walk away barely scathed, break even, whatever? This is the situation that I hate with penny stocks. I day trade them and I tell people not to invest in them, right? This is why in my penny room, it's day trade with sparkles of swing trading, but we're only buying at 52-week lows. We're not buying at peak and chasing after these pumpers. But I'm telling you right now, HG, I am heated. You can tell I'm fired up. I usually don't get like this, but this guy is a total bag of assholes in every single way. And yes, I know.
I don't mean to laugh, but I mean, you're right. It's terrible for the system, like you said, because now the sell pressure, any kind of pump that they do get, everyone that is holding the bag is going to start selling.
Oh,
so for them to get back even above 15 is going to take, like you said, so much effort, so much, 2 years of good news might get you back.
Who's going to trust the pump?
No, that's what you need. That's what I'm saying. It's going to have to be an extended, I've seen this in crypto is, Cardano shot up to $1 off its ICO in 2017, then traded 17 cents for 3 years. It took over 3 years for it to recover so that, the bag holders could start slowly getting out. And because anytime there was any kind of move up, someone that had been holding it from $1, it hit 25 cents. Well, I'm out. Then it goes back down to 17, works its way back up to 30, another million leaves. And that's what BBBY is going to start facing. That's a really tough thing to get over.
No, it is. And like everybody expected AMC to explode this week, and then they lost the 200-day moving average. And,
you called that one, man. Again, the worst FOMO trader in the world almost chased that one.
But I'm saying I knew that was going to happen. And now if we look, GME is dumping here. They dropped down to 34.5. They close at 37.93. This is not just affecting the BBBY.
All of those names, right?
It is. Let's see where AMC is here. So I'm just going to pull this up. I'm going to share my screen really quick.
Awesome. I don't have to put mine on.
Here, let's just pull it up on my day trading chart. And listen, I'm really sorry about the language, but I mean, this is one of the worst things that someone can do from the public eye, in my opinion. You literally rob the people that trust you. And
put the company at risk of bankruptcy.
BBBY. I mean, look, GME is on a huge slide. And remember, he has a big vested interest in GME as well. I bet you Chewy is down too. Yeah, Chewy's slight price. But this is what I'm saying. And yeah, look, I know that we crack on Reddit traders and the meme traders and the apers and all that, but these are just everyday people that are trying to get into the industry and do what we all want to do, which is make money. And when they're like, sideswiped or blindsided by someone's motivation, which is purely greed, it's just to make money. And I don't care what his I plan on donating it to, children with cancer. Okay, cool, man. Why couldn't you let people know ahead of time? This is the problem. And now this is a situation which, I have no problem trying to work through, but my answer is going to be something that people don't want to hear. And it's going to be, well, at this point, you're either going to have to, DCA and realize that this is going to get possibly even uglier, or you're just going to have to bite the bullet. And if you don't want to bite the bullet, then you're just going to hold. And the risk of holding is, well, you could be down 5,000 now, and then a month later be down 10,000. And at that point, it's like the lower it goes, what's the likelihood of you getting a recovery back to your level? And then you hold, you're down 10, you're down 12, you're down 15, 8 months later, it's now back up slightly, you're only down 5. And it starts to slump and you're like, forget it, I'll just take the $5,000 loss. So now
And the
all of a sudden,
opportunity cost.
well, yeah, it's that butterfly effect, right? You hold that position. You could have gotten out here with a $5,000 loss. It hurts. It's like 80% of your account. And then all you did was end up delaying the inevitable by, 8 months, 9 months, and missing on any upside opportunity in this bull market run. And so, this is now going to be one hell of a social media fest that we're going to see this talked about in the news. There's definitely going to be an investigation brought in because obviously the SEC is extremely sensitive, to the meme stocks, and trying to protect those investors as well. And, this is just talking about how shady this business could be at times. And I hate talking about this because this is my livelihood and I love everything about trading. But now the war cries of like Wall Street's out to get us, blah, blah, blah. They're going to chirp harder. And let me just make this very clear. Big money's always been against little money since the start of trading. This is nothing new. This has gone on for over 100 years. It's about time that we accept it. We need to embrace that because once you get past that point, you realize this is still a market where you can make a tremendous amount of money. And it's the same thing, Howard, that you kind of had to go with 3AC, right? 3AC leaving a horrible taste in people's mouth. But that's not truly what crypto is. That's not truly at all what the crypto markets are, and let alone the participants. And that's the same thing that I'm just going to suggest here. Guys, don't be soured on stocks because of a move like Ryan Cohen and Ken Griffin. And we'll talk about him in a second. But truth be told, there are villains, there are heroes. It's just the same thing in our daily lives. But if there's anywhere where you're going to find generational wealth, it is going to be in our markets. And quite honestly, I think the crypto market is going to be much greater than the stock market in terms of recovery. And this is coming from a stock guy. But we have our villains. For me, it's Ryan Cohen right now. We know that clearly. And Howard, you were bringing it up with Sam, SPF, right? Yeah. And his links, right? And how shady that's been in recent days. So let me ask you something.
Yep.
With the news that you shared with me today, directly you said that, there's rumors that he's looking to buy, what is it, Huobi?
A boy. I never say it.
Because I didn't even hear about this. Can you break it down for me, please?
Sure. One thing I want to hit on before that is one thing that you've taught me and that I've learned since getting into sort of stocks and at Prosper is don't become exit liquidity for the big guys. And you have to have that understanding. The other thing is you're a trader. You say that, you really turned my head on that, over the last year and a half, is I'm a trader, not an investor. I'm both. Don't get me wrong. I actually am both. But I have to separate those accounts and separate the mentality between the two. There's one thing about saying I'm going to buy Bitcoin and hold it forever. I'm going to buy AMC and hold it forever. It's probably not the right move for either. You really should trade all of it. You should have a thesis of where you're entering a trade, where you're going to exit your trade, and follow that. I have to talk a lot in my room about methodology. People who say, hey, why did we exit today? Because that was the methodology. When I took the trade, we looked at risk or reward. We set the parameters. We either used, usually on that, I'm using definite all TA to make those decisions. And either on a price channel or on a moving average or a top of linear regression or bottom of linear regression for me. But that's where our exits are. So you have to have that plan and stick to it. So I just wanted to bring that because
dirty to me. I love it.
Well, because I think that sometimes people don't understand that. We have to learn from these. I'm still new to the meme game, especially, stocks and options, not as much, and more options I've always played over the last, 3 or 4 years, as opposed to straight stocks. And understanding that, don't get greedy. I just got greedy with Riot. I mean, I had Riot at an 850% winner. Now it's a 400% winner, because now keep in mind, it doesn't expire for another 2 months. That's why I'm holding it. But I probably should have exited and bought back in like I did earlier on it. That's the thing to do. So I just want to make sure that we make it a learning experience. And then getting back to what you asked me. We're seeing it. So about 3 or 4 days ago, CoinDesk and Bloomberg, everybody started covering that what was at one time the second largest crypto exchange in the world, it used to be based out of mainland China, then moved to Hong Kong, is Huobi, Huobi.
Okay, Huobi.
Yeah, and they're much smaller now because they really did focus on and controlled sort of the Chinese market. So as that sort of dried up, they have not done a good job of reestablishing themselves other places. So it turned out that they were looking to sell, and they had Justin Sun and Sam Bankman-Fried both looking to put bids in. And this all sort of hit the news about a week ago or even less. Well, now over the past week, we've seen that some forces are trying to depeg their stable coin. And if they're able to depeg that, it's going to make the entire exchange fairly worthless. So instead of buying it for maybe $1 million or $1 billion, you'll get it for pennies on the dollar. I truly believe Sam Bankman-Fried is the man behind this. He tries to, again, like you said, come off as the philanthropist. He's part of that Bill Gates, donate 90% of your wealth before you die. But what I've noticed is a lot of those people make all money at all costs to get that number as big as possible. So I get known as giving the most money down the road to charity. And, Sam Bankman-Fried really kicked off the whole contagion that happened in crypto 2 months ago with an interview or podcast on Bloomberg, where he called yield farming and Anchor, particularly Anchor, the protocol that UST was mostly used for, as a black box Ponzi scheme. And even the podcaster was like blown away at the way he was talking. And when I heard it, Sam Bankman-Fried is a extremely intelligent man, really one of the smartest men in the business, and also one of the most tied in. What we didn't know or didn't have privy to then was he's in bed with Citadel and BlackRock. And we say that because he's partnering with both of them to form a new sort of trading ecosystem, as they call it. He's also working, very much within the CFTC, trying to change how settlement's done on derivatives. And again, offering these companies the insight into how it's done through FTX and a trade. In crypto, we don't take into account anything, how much money you own, how big your portfolio is. Every trade is an individual account, basically. So your risk factors are based on, and your collateral are based on the individual trade, not the health of your entire portfolio. So he's working with Citadel and those guys to bring that in. And then BlackRock just announced that they're an investor in his FTX that was never really announced, that he just did fundraising for that. And, again, as I said, I think he has, I'll burn it all down as long as I make billions. Doesn't matter to me.
Doesn't it stink? I mean, this guy is
terrible. And I worked, like you said, I thought Sam Bankman-Fried was, Bitcoin Jesus. This was the guy to follow. This was the man. I don't like a lot of the, I shouldn't say that. I don't like certain people that have been around for a long time, Bitcoin maximalists. They get too hell bent on just Bitcoin versus nothing else, the Max Kaisers of the world, and such. But, Sam Bankman-Fried really seemed to be a man of the people. Everything was about bringing transparency to the markets, bringing, ability for the unbanked, the individual retail trader. He talks all this good game. Same thing like you just talked about, but in the back end, he was the one burning it down. And there is no doubt that, whether he was the money that did it or whether he showed Ken Griffin from Citadel and Larry Fink from BlackRock where those stress points were, the fact was, and you talk to anybody that even knew that Luna UST was not sustainable. I knew that the Anchor protocol was not sustainable. But mathematicians had done all this work and said, okay, it might be unsustainable, but it's going to go from 20% APY to 15% APY. And that should last for the next, 6 months to a year. And then we'll do the math again and let you know where it is. Yeah. Instead, in 3 days, it went from, $1 at UST to 3 cents. So, it completely destroyed the crypto system, set us back years, literally years. And they had no concern about it. So, I know how angry you are. That's how I felt, over the last month, is this stuff is sort of got unearthed.
Yeah. HG too, you were unsure about that. Like, cause I brought it up and, it just sounded funny because for me, as soon as Citadel and BlackRock all of a sudden getting interested in crypto and because of the value, things start to kind of stink. And then you're like, but once you did just a little bit of research, you were like, holy crap. And then all of a sudden you spilled all this crazy information. And for those that don't know, Howard, once he starts looking into something, I'm telling you, he unearths it all. This is really why distinctly he understands his projects and the ones that he invested. And more importantly, he is a basically internet server of knowledge.
Yeah, I mean, that's the one thing.
When it comes to crypto, man,
is everything is on chain. You can follow these trails. You can look at wallets. You can just see the trail sort of come. So, I do spend a lot of time looking at on-chain metrics, all that stuff, seeing where the block trades are happening, how are they happening? And crypto, what we see, and I'm sure you see it in the stock market too, we see repetitive orders at a weird size. So that it's algorithmic trading or bot trading when you see, continually 13 Bitcoin buy, 13 Bitcoin buy, 13 Bitcoin buy. It's not just randomly that, 100 people in a matter of 25 minutes did that. They're splitting up their orders to try to obfuscate what's going on because they don't want to sell that big block and get seen doing so.
Dude, they're saying right now that he cashed out so he could buy more GME.
Oh, that's the apes
on Twitter.
I mean, that's what I mean. That's where I get so nervous that they just don't understand that their exit liquidity. No,
clearly they don't understand.
Yeah, I mean, it's just crazy, and they just keep believing. That's the part that gets frustrating. Is I love the apes. I love what they're doing. Like I said, I'm buying some AMC tomorrow because I want to own ape because I want discounted popcorn at AMC.
I'm gonna just make this very evident. I traded AMC on that pump, on the original pump. And my clients, I exited at like 22, but my clients held on strong. Most exited between 40 to 50. I played GME several times. I got burned on a few, but I also caught I think 150 point winner where it moved 50 points during the day. It exploded from like 50 to 98. And then it went up and hit I think $200 to the penny after hours. And I was on my after hours watching people. I was in my Discord as well. So I was in both the trading room and the Discord screaming at people to take profits after hours. And in all respect, I am an ape too. I trade momentum. I love these pumps. I'm all about it. But the one thing that I know for a fact through history, because of my history, is that it's not like I've seen anything like this before per se, but I've seen things like this before, and they never, ever, ever end well, okay? The only one, in my opinion, that was pumped and was sustainable to hold was Tesla.
I was just about to, I knew where you were going with that, because you're right.
That's the only one, and that's because of Elon.
Yeah,
right.
Absolutely.
And I say it, never fade the Musk. I'll day trade against it, but never fade the Musk because Tesla's been so strong. But I'm telling you, it's all the new participants that's getting involved, and I understand and I totally respect and I absolutely love the power of positive thinking. But I also want to slap people and say, hey, this is reality as well. And you got to realize the situation that you're in generally doesn't end well. It's like you got to just reposition. And this is something that people don't understand. And remember, the calls for 100,000 in AMC. Yeah, no way. There's people holding on GME, cost averaging price in the 200s and the 100s. And obviously with the split, it's trading at these 35s and dropping lower. And I'm telling you guys, this is just never going to be what you think it's going to be. The MOASS, the MOASS. Are you familiar with that?
Yeah, that one I do know. Mother of all short squeezes.
Yeah. Hate to say it, it's already happened. That's when GME ended up hitting $400+. It's never going to happen again in GME. It's never going to happen in AMC. I told the room today, Wall Street, for a fact, learned their lesson. Okay, the memes and all those other pumpers like KOSS and BB and CLVS and all those other names that just went parabolic. Wall Street learned their lesson. Guess what they're going to do? If it starts squeezing against them, they close out their positions. And when it gets to peak value, they drop the hammer on your head.
Yeah.
And they know for a fact they could get you.
Well, can I just say my one comment on that is that I think they've learned. In other words, they now know how to play that system. They know how to manipulate that crowd. Like you said, I was ready to do it. I was like, man, Charlie, I think I'm going to buy AMC. What do you think? And you're like, going to sell against it. They're going to push it down. And I just wasn't thinking. My whole thing was if it was going to be this short squeeze, it would be this week because everybody wants that ape. You know what I mean?
Right.
So that was my fundamental, not looking at technical and not realizing, like you said, and now I now realize is that the hedgies know exactly how the apes are going to play the game. So now they set the rules.
Yeah.
The apes set the rules in that one, and like you said, in the MOAS, the apes were setting the rules. Well, guess what? That's over. And it's Ken Griffin and it's, Larry Fink, and it's those guys are setting the rules again. And
yeah, I mean, you asked me directly about AMC, the call price, and what I felt about it, and I said it's a total crapshoot. I said it could pump, but like I said, I've seen this, the ending of this movie before, and I felt that with the monthly options expiry this week, they're going to try and crush the stock going into expiry and just totally hammer it on these people. And these people meaning the apers that are trying to jump in, trying to get the issuance. And I didn't really know too well about the cutoff date. You basically had to verify that. But it's just like that specific dynamic where everybody's looking at a certain event and it's a known date. And then, online yesterday, I'm in the Reddit group on Facebook. I'm in like 20 different trading groups. Plus on Twitter, everybody's saying, how could it be going down when I'm buying more shares and I'm not selling? Who's selling? And I'm just like, guys, it's just really, it's economics 101. It's supply and demand. If I look at the tape, it's not only green, there's red there. So other people definitely started to take profits, and they're like, why would you sell? Because you could get ape. And I'm just like, some people don't care for ape. Like for me, I personally didn't care for it. It didn't mean much. I mean, if ape is a traded equity, I could just buy it in the markets if I want, if I thought that it's going to be strength, and like the whole distribution idea. Remember, AMC, GME, they talked a lot about these special dividends and distribution, but really they're just glorified splits. And this is where I'm trying to like get people to understand that I'm not talking out of my ass and I'm not sitting and guessing. That history has proven itself, just like when Howard warns us and talks about specific things, or he uncovers specific things, he warns us. And not only does he warn us, he trades it as well. And not only does he trade it, he trades it for a win, right? You talked about the difference that you have seen in terms of your attitude towards being an investor and as a trader. And for me, I felt like your accuracy as a trader is really, really good, Howard. Honestly, it's really good because I take a lot of your signals as well. And, you do the same thing when it comes to stocks. You ask me for my advice, I give you my advice. And then you take the trader mentality and work with it. But that's the thing. You and I understand the difference between hodling and trading. And, you broke it. You nailed it right on the head there, that you have to separate the two because the attitude and the approach are very different. So, I got to ask with this, because you're not the only one that thinks this about Sam Bankman.
There's been no one will call him out because he's the biggest man in crypto.
Right. Right.
But,
right. I understand that. But I mean,
I don't care. I think I absolutely will.
But how do you feel this is going to play out, let's say, with now Citadel and BlackRock positioning themselves the way they are?
Oh,
I feel like Goldman Sachs
take that a step further. I don't know if you saw the SEC filed suit against Tether and gave him a cease and desist today.
No, I saw you post that article. I didn't get to read it.
So in the last 2 days, we've had the FDIC and the Federal Reserve tell banks if they're going to do business with crypto or increase their business with crypto companies, they need to first let the central bank know, and they'll give them a guidance as to whether that's okay or not. And I do understand part of that is because of Voyager. And Voyager was out there telling people that their accounts were FDIC insured. And it was supposedly the money that was in the banks, Silvergate Bank, the cash that was being held. Yes, but the FDIC only would protect if Silvergate went out of business, not if Voyager had problems. So they were incorrectly telling people. And I heard Tom Emers, Representative Emers from Minnesota today on TV talking about it. And he brought up if regulators would just do their jobs and be watchdogs, which is what they're supposed to be, and follow the mandates that Congress gives them, we'd have a lot less of these problems. But what we see is the SEC's turned into an enforcement, a guardrails or a regulation through enforcement and through past tense. So instead of stopping RC from doing what he's doing after we saw the GME disaster and the meme issues last year, they'll slap him on the wrist and give him a small fine and he'll walk away with millions of dollars on this. And that's what we're seeing is the same type of thing in crypto is they're going after ICOs that happened in 2017. It's 2022. Yes, I want you to get those people who did bad stuff, but how about we worry about 2023 and get companies compliant and get regulations and guardrails in place that stop this both in the meme and stock market and in the crypto market, and that's what we don't have. They're not setting, the right precedent, in my opinion, and that's what we're seeing.
Correct me if I'm wrong, but Howard, didn't you bring this up like 4 or 5 weeks ago about the FDIC and being a little shaky and kind of being a little suspect? Didn't you because I think I remember.
I was talking about the Fed, more about the FDIC and the Federal Reserve in regards to that they wouldn't let crypto into the banking system. Again, there were crypto banks, there were custodian banks that have been federally chartered since, the Trump administration was in there, since, Brian Brooks was running the OCC. And they have tried over the last years to become part of the system so they'd be more regulated, so they'd be more transparent, so there'd be these protections, and they won't let us in there either. So it's been a really coordinated act. So that's when going back to your question. So I'm not, I can't go as far as I'll go against Sam Bankman-Fried, but Gary Gensler is right there. I think that Larry Fink and Ken Griffin are pulling those strings.
You should wear the other shirt today instead of at the Fed.
I had that on earlier. Yeah, no, yeah. I mean, this is, to me, banking is slavery and crypto is the answer to that. And that's what we've been put up with. And, and again, and I love, the problem is that, our elected officials can't decide whether it's sunny or raining outside, never mind make actual meaningful legislation right now. And as a result, crypto, which needs regulations, is going to go through this entire year without anything getting passed, without one bill getting passed in regards to crypto.
Sounds like the cannabis market.
Unacceptable. It's just unacceptable.
Well, let me ask you something. I don't know. I didn't share it with you, but I saw a news headline on this. Did you see that Coinbase is not going to allow staking on Ethereum anymore? And they may not allow staking in general because of the SEC.
So it's kind of funny because, right. So there's a few things there to unpack. Gemini announced today that they're starting staking and they're probably the most compliant exchange in the US, being based in New York, which has even more stringent rules than the rest of the country. Because in crypto, every state has its own rules because they're all money transmitters. They're not regulated by the CFTC or the SEC yet. But yeah, Coinbase has been getting a lot of flack because they control about 16% of the Ethereum that is currently staked on the Ethereum, beacon chain, which will become the proof of stake chain that comes out. And there were questions about, well, what will happen if they have to be compliant with these OFAC regulations? Will they not validate transactions coming from these wallets? And it caused a whole shitstorm.
I bet.
Yeah, and Vitalik even came out and said, well, then we'll slash their stake. We'll burn their stake. We'll take away that money. So, so that started a whole bunch of controversy. So now Brian Armstrong saying, if forced to make that decision, he will stop Ethereum staking. So they didn't stop us. I think they're not taking any more Ethereum staking right now, while they sort of figure out the legal ramifications. But they're already the largest staker, outside of Lido.com, which is, where Staked ETH is done. So,
okay. So because we got to wrap up soon, and I still want you to talk about the new information on the ETH merge. But before we get into that, it just came out right now. BBBY CFO in a Form 4 filing. He started selling too. He sold 55,000 shares in an average.
They're all in it together. They're all in it together.
No, they were. and BBBY, by the way, made comments this morning. Very quickly, I'll break that down here. Let me pull this up here. They said that they've been working expeditiously over the past few weeks to strengthen balance sheet. It says continue to execute on priorities to boost liquidity, make strategic changes, and win back customers. And then says was pleased to have constructive agreement with RC Ventures in March. Maybe they brought him on just to pump the stock up.
Yeah, it sounds like it.
Like I said, RC was pretty adamant about how these executives were paying themselves a ton of money, et cetera, and the stock and the company bottom line was getting destroyed. And here we are. What difference does it make? He sold off just like the insiders did and made a big. But sorry, didn't mean to cut you off. So can you break down what we were talking about with that Ethereum merge? Because we were trying to rush to get the show started.
Yeah, we have the Ethereum merge. It is on track to start September 15th. They actually moved it up a little bit. Everything has been successful. So that has been really, really positive news for the industry in general. And in regards to that, the Ethereum Foundation came out and developers and released some information because sort of like a frequently asked question type thing. And there were a couple of points that I don't think people understood. I know that I didn't. And that, one of the things that's a big worry that I had talked about already was when the merge happens and we get this unlocking of all of these staked coins that have been on there since the Shelley, for now about a year and a half. People started staking their Ethereum knowing it would be locked up until this merge was over. A lot of those people bought in at $600 or less. So, now, even at 1,800, that's a 300% win for you. So will people take profits? They should. Again, if they're listening to you and I, they would take profits. So I knew that there was a delay between the end of the merge and when that lockup period actually ended. So a lot of people didn't. I think I talked about it here on this podcast.
Yeah.
That it happens usually. It's going to happen between 6 months and a year later. But even more interesting is there actually is a limit and only 6 people can unstake per epoch. Which means that it will be a much more limited but drawn out sort of sell event. But I didn't realize that. And there's limits to how much can be sold at any time. So, or unstaked at any time, not sold, but how much can be unstaked. So it actually is a little bit more reassuring for Ethereum and smart that they have it that way. So I just wanted to bring that up because I know a lot of people are playing that as a thing, shorting Ethereum, maybe going into the merge as they feel that, this unlock was coming. And, I saw stuff on Twitter and I responded to people on Twitter like you do, saying, hey, you don't have the right information. The unlock's going to be 6 to 12 months after. And they were like, yeah, but man, that's really going to be a bad day. And I was agreeing with people. Yeah. You all of a sudden allow about 70% of the Ethereum. Remember, 70% of Ethereum in circulation is currently staked there.
Yeah.
So, if all of a sudden 70% of the, gets unlocked all in one day, it could be a free for all. But it's going to be done in more of a drip way. So we'll be interested to see how that goes.
Because you and I were both anticipating the pullback.
I think we'll still see that. In other words, we still see the sell the news event, buy the hype, sell the news is definitely still going to be there, but not to the extent that we might have seen or thought that we could have saw.
I mean, maybe just if it dips more, I'll just buy some more. Howard, what do you think?
I can't argue with that. Although, again, I would point more to what you tell me is I will probably close out any longs just before that day And you know what? If I'm wrong and it goes up right after the merge, then I'll buy back in and I'll lose a little bit of the profits I would have made, but I'll protect the profits that I've taken, that I have.
And that's a smart attitude always. And again, just because we have all this information doesn't automatically mean that either a stock or for example, this Ethereum is going to behave a certain way. We just don't know. We just don't know until we get to that point. And I think that kind of leads to that guidance, because there's times where I feel like, obviously, you and I could somewhat see the future, but it's more that you and I have an understanding of what outcomes can be. And I feel like that's such an important factor in both of us being traders. And that's where a lot of people can, quote unquote, potentially envision themselves when they take on trades, but it becomes very one-sided and very leveraged in that one side. They don't look at the downside risk like you and I will understand what the downside risk will be when we take on any position. And more importantly, most people only think about, it's like going to the gas station, buying a lottery ticket, and then seeing what you're going to do with the money that you win, right? But the cold reality is, A, you're most likely not going to win. And I'm not saying that's going to be like that with trades. And B, you're thinking about the absolute extreme. It's a true dream in that instance. So, this is, I guess, a learning point for newer traders that are listening to our podcast, maybe even the veterans themselves. It's not that we could foresee the future in any event, but we have an understanding of what outcomes can be, both positive, negative, and neutral. And that's going to help our decisions going forward, right? When things work to the plan, we stick to the plan. When things deviate from the plan, then we got to adjust in accordance. And, you brought up that point with how Wall Street has adjusted. You and I have that saying, but most specifically, I love this war cry. When it comes to the stock markets, if you're going to be in the stock markets for a long time, and it's the same thing with crypto markets, you adapt or you die. And I don't mean to sound so morbid and dramatic, but it's the truth. You adapt or you get left behind. And it's the theory of evolution with the stock markets, guys. And I'm telling you, if you don't adapt quick enough, you are going to get smoked and left behind. So just keep that to your core. That's going to be so important. It's going to serve you so well. Howard, any final thoughts before we sign off here?
For me, just looking at Bitcoin, everybody out there that's holding some Bitcoin, we're in a little bit of a rough period here. We can't seem to get above 25K. If we don't, look for a downside to 22.5. So just want to give my little 2 cents.
That's a great breakdown. I'm just going to pull this up really quick here. My little messy chart here. Howard's pointing out that this is the Bitcoin on Coinbase. But you can see that little deflection here right off the moving average. The overall trend has been smooth, but it's been very quiet. And look at how wicky it's been at these tops. So we can see that little deflection. For me, guys and gals, I'm in the same boat with Howard on the SPY. The SPY is that major resistance, which I've highlighted. We hit that 200 SMA and we're stalling underneath. And, there's a name, a big tech name. It goes by Microsoft. You may have heard of this company. They're facing that same type of deflection. So we may be seeing a short-term peak. Here's Microsoft very quickly. I have already highlighted it for followers and clients.
Nice.
We may be seeing that short-term peak, and I think I talked to you about Microsoft being that fade. This is a major reason why. If we start seeing that lid come on that pot, guys, again, we can't really creep on higher here. Howard, great points today. Great breakdowns. Sorry that I went off a little bit, my man. And usually
not at all, buddy. I knew you
positive and lovely.
I knew you were mad, man. You don't get fired up like that. You're usually a pretty calm guy.
No, I'm an emotional guy, truly, but I never let emotions dictate trades. But I'm telling you, this RC thing stinks to high heaven. Now we'll see what the outcome is going to be, but I gotta tell you, I do think that AMC, GME, and BBBY, and Chewy, and others will bounce. The question is, how far will it drop before the bounce comes in?
Right. What will it hit first?
Yeah.
I'm targeting 10 tomorrow for AMC. Remember, I told you that.
Man,
Joking, everybody.
let me just pull up very quickly. Last thing on AMC.
Yeah,
I
I would love
highlighted that it had to
Yeah,
hold
yeah.
that 200 SMA because the last time it ripped it to 27s right here. It ripped it from here to 27.
Not sharing.
Oh. I appreciate you calling me out there. No,
Because I want to see it. I'm
no.
you know, I'm gonna go in tomorrow.
Right. So the last time on that 200 SMA, it bounced and ripped it to 27s where it hit that double top. We came down to it today, held briefly, and then it flushed, and now it's closing out. So the next layer that I am watching is right around 1834s. Let's see where we are at in pre-market. Oh, shocker. You see this little yellow line that I've drawn here, right?
Yep.
Look at what we're holding, Howard.
Right at it.
Yeah, so we'll see if we're going to hold that lower level because, again, once we breach support, it's on to the next level, right? That's how we trade these levels, right? When we break resistance, we ride to the next resistance level. So if that fails to hold, Howard, you know, in all honesty, you got to look deeper. It's probably going to be at 16s before it starts finding demand. 16s will be a good price to get in cheap to get your apes. You get more ape in that instance, brother. And then we'll see what happens once next week comes into play. Like I said, I don't know how far back we're going to go. This 18, 25, 30-ish level, we're going to have to watch. Yeah, 1837. We just hit a low of 1841 and bounce. So we'll have to see how we open tomorrow. We'll see how the overnight markets digest all this information. And realistically, we're just going to have to wait and see what the fallout's going to be, both from, it's a lot of news that we both had to break down. Some of it's pretty crazy with SBF, BlackRock, and Citadel and their moves and what's going to happen with RC and the follow through here. But wrapping this up, guys and gals, just want to say thank you for tuning in. Do us a favor, like, comment, subscribe if you haven't subscribed already, and more importantly, share this with your friends. This was a little bit different. Normally we try to be a little bit more educational and inform the public, maybe some information and news that they're not familiar with. But today was a lot different. It was more, I guess, just speaking on the news and kind of ranting about it on my end. With the great Howard Greenberg, with the crypto crew, this is the Dips to Rips podcast. Like I said, if there's anything else you want us to cover, you want us to break down trades, drop those in the comments below. We'll be more than happy to cover any kind of crypto coin or meme stock, or maybe even a tech name or two. Ladies and gentlemen, peace and love. We're out of here.
See you guys next week. Thanks, Charlie.
This has been Dips to Rips with Howard Greenberg and Charlie Moon, brought to you by Prosper Trading Academy. Visit us at prospertrading.com to find out more. This podcast should not be considered professional, financial, and/or investment advice. By accessing this podcast, you acknowledge that Prosper Trading Academy LLC, PTA, makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this podcast. The information and opinions presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. PTA does not endorse, approve, recommend, or certify any information, product, process, service, or organization presented or mentioned in this podcast, and information from this podcast should not be referenced in any way to imply such approval or endorsement. The third-party materials or content of any third-party site referenced in this podcast do not necessarily reflect the opinions, standards, or policies of the PTA. PTA assumes no responsibility or liability for the accuracy or completeness of the content contained in third-party materials of the third-party sites referenced in this podcast, or the compliance with applicable laws of such materials and/or links referenced herein. Moreover, PTA makes no warranty that this podcast or server that it makes it available is free of viruses, worms, or other elements of codes that manifest contaminating or destructive properties. PTA expressly disclaims any and all liability or responsibility for any direct, indirect, incidental, special, consequential, or other damages arising out of any individual's use of, reference to, reliance on, or inability to use this podcast or the information presented in this podcast.